Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me to the new week of a challenging situation with the Australian dollar at the present as it's trying to recover. Over the last 5 consecutive days, the Australian dollar bulls and bears have been hit hard in the arena and trying to determine the direction of the trend. After recently challenging the 72-cent region, the market plummeted back to the bottom side of the range where the crucial support holds at 70.60. As it's now recovering, the market is now looking towards a resistance of 71.75 with a cap still around 72.40. I still believe the market will struggle to even attempt to try and take the challenge around that 72-cent level and could still plummet back towards the bottom side of the range and reassess from there around 70.60. It is interesting to see that we've got 3 dojis in a row here. They are known as tri-star pattern. This pattern signals a possible reversal in the current trend, being only small, that is, that the bull trend is attempting to recover further. As you can see, the market is now looking back again at 113.70 after three rejections. Although this is not as prolonged as a normal tri-star is seen, but the first doji indicates indecision between the bulls and the bears, and the second doji gaps in the direction of the prevailing trend. And the third doji changes the market sentiment after the candlestick opens in the opposite direction. As you can see here, we're getting lower lows and lower highs. With that all being said, though, the fact is that since the dragonfly, or close to the hammer, which is a bullish candlestick, it still holds from the technical point, and we could, as I say, see one more test towards 70. Until we get a break above there, then I still hold the view back to 112.50 and reassess from there. Well, the dollar yen hasn't really traveled anywhere in the last few days, but still presses the resistance at 110.95. It is currently viewed that this should cap, and I don't feel that the market has the momentum to climb back above or even sustain above that level of 110.95. So I do expect to see weakness to turn back to 110.35 to 109.70. Well, the pound hasn't really staged any significant moves over the last few days and still remains capped around the level of 130.80 to 131.25. It is assessed that we could see still further weakness due to the fact that the pound may be hit with a hard landing to the Brexit situation, which is getting closer to the deadline of March the 29th. The immediate support comes in at 129.85 and then down to 129.35. Still in this very strong broad up channel is the fact is that gold should still remain irrespective of the 1,312 base to a high of 1,352. It is assessed that from the technical point that the pullback will give opportunity to buy the market, and as long as we maintain above the level of 1,312 with the support above at 1,318, then I am looking up towards the region for this week of 33 to 37 and 44. And also, Trump is set to hold a second summit meeting with North Korean leader Kim Jong-un on Wednesday and Thursday. And also this week we do have the economic outlook and monetary policy plans from the Fed Chairman Jerome Powell, which is scheduled for Tuesday and Wednesday, to keep an eye on that as well. The oil outlook still remains capped at $58 a barrel, but we can still see a further gain given to the fact is that this inverse head and shoulders does give us a target of $64 a barrel if we break above 58. Dips are a buy towards 56, but still leave room to 55. As long as those two supports hold, then my bullish view should eventually clear 58 and head towards 64. Well, that wraps up for today. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy the great start to the new week.